Welcome to TradeTheNBI.com. This is John. This report is for the 8th of November. And, well, as we saw, we retraced back to that 50%. Not a shock, and still plenty of buyers. And, of course, like we talked about, new fund money coming in. So plenty of liquidity available there. We're starting to see the beginnings of a turn down in the magenta. That may soften things just a little bit, but at these levels at 53, still strong from a bullish standpoint. We look at the DOC, continued reset of the steel, which short-term buyers, so they're just resetting so that the new dry powder to make a move. But we did see the turn of shorts here from the cyan moving back above red. Now, if that holds up during the day, that would be interesting because what we talked about would be this reconnection right here of the cyan and green, and that would be the battle of who wins on that rejection. And at this particular stage, it's critical that the bulls continue to push things forward because any failure in that shakeout that would result in a move back towards that 43.22. And again, we have these positive extremes going all the way back to the low right there at 42.59 range, and that would be the typical pullback within that, and would not be out of line, particularly since you're reaching this previous pushback area. And if they're not able to break out from this, you still maintain your relative, not necessarily downtrend as much as just stabilization within this range. From an NQ standpoint, much stronger. And you can see that's been the leader throughout, and literally still back at the same relative level as the S&P, but value-wise, much more significant because it never had that full retrace that the S&P has gotten. So any weakness in the tech sector is definitely going to be disproportional, and really will move the S&P significantly more. Treasuries, from their standpoint, again, people activating back into that, and that lowers the yield back down to more reasonable range. And that's mostly due to this continuation of the softening of oil. And that's a huge relief for people from an inflationary standpoint, but it's problematic because it promotes growth, and that will cause the Fed not to be in as accommodating mode because, again, moving oil down, since we're really not seeing an escalation from the Israeli conflict or anything new or special from the Ukrainian situation, that's providing a little bit of relief, and in that sense, that's helpful for economic growth. But not so much from a monetary easing, which the market tends to like. So that could be part of the reason, a little bit of softening for the bullish run at this particular stage, because when it looked like things were generally weak for economic purposes, you get a bigger move. When we look at the euro, it's kind of an interesting situation. I mean, all the headlines coming out of the Eurozone are stagflation and or no growth and really strong underperformance. And of course, European economists with their version of, to me, it's sort of I've always kind of mocked European economic views and how they view growth and everything. And they always thought that just, stimulus and monetary policy would affect things. But with the business regulation and things that they do and the high taxation within a lot of things is very anti-growth. And so the fact that they barely held on to just preventing, being in significant recessionary area, this is not a surprise, and it's actually a surprise that they've actually been able to hold it over the parity level, given the differential between where U.S. growth is versus theirs. It's just not even comparable. Of course, that oil softening and without tensions in that, gold pulling back just slightly, it still has to fill back into these positive extremes anyway, so none of that's out of line with expectations. And Bitcoin and that continuing its parallel but still relatively strong move. I mean, this is still within a strong buy configuration, cyan under red, and complete reset of the steel. Even though it's below the negative 13.5, that's a little bit of softness there. But every time it punches back above, you've got a full reset and the ability to continue to break out. So that's fairly decent strength from the crypto side of this one, albeit gold much more muted. And we know the disparity reasons why that is, and it's strictly related to the paper market for gold and its ability to just manipulate things from a paper standpoint as opposed to the physical aspect. From the 50K standpoint, we had the bounce of the MBI White. Didn't result even into a move of 50% yet, so it's going to be a secondary one that will require a little bit more fade. This rising Morganacci lines to the zero. Yes, it's pulling price a little bit to the downside, but not going to be very far as we get a squeeze right there, and that's going to be interesting because the tighter that squeeze is, the bigger that blowout is going to be, depending on who can get control of that situation. We look at it from an intraday, uh, generally positive all the way through. We had some positive extremes that started there. They got filled back intraday, which is clean. And when you get that kind of clean retrace and reset, it just supports new uh, purchase levels, and that's exactly what we got. And then at the end of the day, things have gotten a little bit softer here in the post market, but nothing significant, just clearing stops and literally pushing back towards relative to where the close was. So all pretty even and just sort of a matching game, but I would think that the Bulls need to do a little bit stronger, and so I would expect some type of push move that will really significantly get things in line. Otherwise, we're going to run out of the new monies, and that will create a problem. And so that's where we keep an eye on the treasuries and that see where that goes. If money is going to a more conservative location, or if they're really going to push this year-end rally like we would expect. It's that time of year. As always, though, I will continue to update you on the Skype chat. Have a good one. Trade well.